It's time for our Spend with TMS segment. And first up, let me inform all our viewers that the concessional loan offer period, that's essentially the brief period that banks like State Bank of India were giving home loans at an extremely low interest rate, and has now come to an end. So State Bank of India has once again reset its home loan interest rate to 6.95%. Excuse me. The bank has said that home loans will now be available at 40 basis points above the external benchmark linked rate. Other players, of course, are yet to announce revision in home loan interest rates. Remember that there are many banks who do still have a low interest rate, like the Punjab Bidsin Bank, which is offering 6.65%, ICICI Bank at 6.7%, Bank of Baroda as well at 6.75%. So these are still attractive home loan rates, but State Bank of India, which is the country's largest lender, has once again upped its home loan rates. It had back then as well, about 6 months ago as well, said that these low interest rates, which it had offered of 6.7%, are applicable only till the 31st of March 2021. Okay, well, meantime, last week at the Supreme Court, there were several announcements made. Firstly, there's no extension of the moratorium. However, it was also coupled with the fact that bankers and financial institutions and lenders cannot charge interest on interest during the moratorium period which was offered. That's from March to August. So we'll understand the implications of all of this. The fact that HDFC Limited actually increased the deposit rates for deposits which have a time duration of more than 33 months. Aadil Shetty, the CEO and co-founder of bankbazaar.com, joins us now on the show. Aadil, thank you so much for taking our time and joining us. Let's first recap what happened at the Supreme Court. What are the implications of the verdict on borrowers? And of course, when I say borrowers, I'll talk about the ones who have borrowed more than 2 crore rupees, because it was largely for this category of borrowers that the Supreme Court verdict did have an impact on.
So Mubina, for the borrowers who've taken less than 2 crores, so let's say I've taken a home loan of 50 lakhs, or let's say I've taken a personal loan of 5-10 lakhs, nothing actually changed, because, the moratorium was already there. A refund had typically been given automatically by your bank, and nothing changed. I think what changed is for borrowers over 2 crores, the Supreme Court said they cannot be denied the benefit of a waiver on interest. So for those people who had a loan above 2 crores, they didn't know that the benefit would come to them, but because of the Supreme Court verdict, it is now expected that the waiver of interest will come to the people over 2 crores. And I think the most important thing, Mubina, is the Supreme Court put this matter to rest. So they fundamentally answered questions once and for all. They said no extension of moratorium. So it's done, right? They said no waiver of interest during the moratorium. So I'll clarify. They had already waived interest on interest, but they laid to rest the fact that there's no waiver on interest during the moratorium, and now the case is closed.
Okay. Adil, so, let's talk about those individuals who had paid their full EMIs post the moratorium. So obviously when the moratorium period was over, they may have opted for 2 things. Either they decided to extend the duration of their loan, keep the EMI same, or then they must have said, okay, increase the EMI figure so that the duration of the loan remains the same. So let's talk about obviously the impact on the second category of individuals, because they are the guys who've started paying the interest on interest at, post August, post September. So what can they expect? Should they contact their bank, especially post the Supreme Court verdict, which gives them the right to get a refund or an adjustment?
Right, great question. So the first thing is everyone is eligible for the waiver of interest on interest. So what I mean by that is you could be a person who applied for the moratorium and used it. You could be a person who kept paying your EMIs, didn't make use of the moratorium. It doesn't matter who you are. You should get the benefit of interest on interest. But now you need to keep in mind that interest on interest was actually a smaller number. I'll give you an example that we just calculated for our customer at Bank Bazaar. We said if you've taken a 50 lakh loan and you got the benefit of interest on interest waiver, it works out to about 3,700 rupees as interest on interest during the 6-month moratorium. So even on a 50 lakh loan, right, we're talking about 3,700 rupees. It's not a very large amount of money. And lastly, right, everyone should have received a SMS from your bank saying that, hey, there's a refund of interest on interest of 3,700. This has been credited to your account. No action is required. Now, if you've not received that message or you don't see it in your bank account, you can always talk to your bank. But in most cases, Mubina, this is fully automatic. You do not have to lift a finger.
All right. Okay. So that's definitely good news awaiting those individuals. Maybe the amount is lower, but think about it. If you had to pay that interest on interest for the rest of your loan period, it would really balloon to a big one. Okay, now that the SE has said that there will be no extension of moratorium, let's talk about those individuals who probably were waiting on the sidelines, hoping that maybe they will allow for some extension of the moratorium, and maybe these guys are also cash strapped. They are facing a massive cash crunch. So they were counting on this SE verdict, but it of course, has not allowed for any extension of moratorium. So how do you recommend these individuals sort of, regularize their loans, especially if they're finding money to be an issue right now?
Yeah, so let's start with a clear understanding that the moratorium was not a waiver of your interest payment. Your interest payments were accumulating through the entire period and you were paying what interest you had signed up to pay. It's just that there was a moratorium on EMI. So now I think borrowers have two paths they can traverse. So people whose salaries have recovered, whose businesses have recovered, we are strongly recommending, right? Please bounce back by making a single bullet payment of 1.2x of the EMI you didn't pay during the moratorium. We're calling it the switch hit and advising it to all Bank Bazaar customers, saying whatever you didn't pay as EMI, now that you have the cash flows, take 1.2 times of that and pay it as a single lump sum payment. So that will regularize your payment. Because if not, right, just keep in mind that obviously this depends upon the use case. And Mubina, you've covered this on your show previously. But if you're in the early stage of your 20-year home loan, by not paying 6 EMIs during the moratorium, you might end up paying 25 EMIs at the end of the loan. So if you have the money, please regularize. Don't even think about it. Now, if you're still cash strapped, option number 2, if you're still cash strapped, you've not seen your income recover, you've not seen your business recover, there is a loan restructuring. But keep in mind, loan restructuring is a separate process. You need to contact your bank, you need to apply, you need to provide documents saying that your income went down or you lost your job or you went through a pay cut. The bank will evaluate it on a case-by-case basis and then work with you on a loan restructuring. A typical loan restructuring example is they can say, we'll increase your tenor by 2 years. Now, when someone increases your tenor by 2 years, potentially, right, they can either reduce your EMI or they can give you a few more loan EMI holidays. But this is a separate process. It's a unique application. Certain banks are taking applicants for restructuring online. You need to apply, you need to answer questions, you need to get approved. So these are the 2 steps available to borrowers. But I would strongly like to say anyone who has the money, please bounce back and bounce back by paying 1.2 times of the EMI moratorium to your bank today.
Okay, understood. Last week the RBI had released the latest average base rate. It does have implications for NBFCs. Potential borrowers may now see that NBFCs as well are offering a more attractive interest rates. If you could just explain that concept, and is that going to be what the case will be now?
Yeah, so let me answer this in 2 parts, right? So let me just explain technically what happened, and then I'm going to talk about practically what it means for a borrower, right? So technically what happened is the base rate, which defines at what rate NBFCs and MFIs can lend, the RBI cut it to 7.8%. Now, NBFCs and MFIs can lend up to 2.75 times higher. So approximately that puts the cap at which an NBFC or an MFI can lend out at around 21%. So that is the technical matter. But now let's say practically, right? Now, there is a reason why NBFCs charge more than banks, because typically NBFCs take more risk by lending to customers who are slightly more risky than the customers banks lend to. So NBFCs are willing to lend to people who might have a lower income level. NBFCs are willing to lend to people who have a lower credit score below 700. NBFCs might be willing to lend to businesses which are younger. So NBFCs charge more because they typically assume more risk. And they play a very important role in the industry because someone needs to borrow from the banks and then lend to the slightly riskier sector. And NBFCs play a very, very important role in the Indian economy by playing that role. Now, that being said, Mubina, I don't think NBFCs are going to become on par with banks on their lending rate, but new base rate of 7.81% sets up a cap, right? That the NBFC now can lend at a maximum rate of 21.48%. So NBFC customers can expect their NBFC loans to become cheaper. Yes, definitely post this base rate cut, the loans we can expect will become cheaper, but they still will be more expensive than the banks.
Okay, let's move now to the depositor side. Finally, after very long, HDFC Limited actually announced a hike in some of their depositors' rates. What do you think prompted that? And do you think that maybe we could finally see some more financial institutions increasing the rate they offer depositors?
Yeah, so let's start with what happened, right? So HDFC Limited, the largest private mortgage lender in the country, increased their 33-month fixed deposit rate by 25.25% to 6.25%. So that is the point to note. They appear to be one of the earliest of the fixed deposit takers to have increased their FD rate. Now, while it is true that base rates are at a very low rate, which is 4%, they were 5.15% pre-COVID, the expectation now, Mubina, is that the rate cycle is going to change. Now, this is happening for two reasons. One is government borrowing is increasing. So the budget is out. We all know how much the government is going to borrow. And when government borrows large sums, over 12 lakh crore rupees, the private sector needs to be competitive in order to raise funds. So it is expected that, we appear to be at the turn of the rate cycle. The inflation numbers are also starting to push up. So there is a general sense in the market that FD rates are now going to start increasing. HDFC Limited has already announced it effective March 31st. And we now expect that other fixed deposit takers might also start making similar moves. And we might see certain benefit for depositors as the rates start to pick up.
Well, yeah, that was actually going to be my question, that now can we finally expect a reversal of sorts? Up until now, we've been talking about how rates will be paused at these levels, but now finally we may start seeing a reversal as well. All right. What's your view on some of these instant personal loan offerings that a lot of banks have been launching? I mean, we have, of course, seen digital lending apps, and they've come under the RBI scanner because of their unfair methods being used on customers to, sort of recover money. But yeah, in general, for personal loan offerings, a lot of course, bigger, more reputed names as well are offering them. But do you think that's a good option to choose for those individuals undergoing going through a cash crunch?
So I'll answer this question in two parts, right? I believe, Mubina, that the paperless or instant personal loan is now become the new normal, because I think no one is able to go to a bank branch with the danger of COVID, submit documents, meet people, give 6 months bank statement, 3 years income tax record. So I think that has changed, right? So people want everything on the mobile app. They want it instantly. So I clearly believe that this instant loan or paperless or contactless loan, COVID has made it the normal way, that 80% of Bank Bazaar customers want things without paperwork, and they don't want to meet anyone from the bank. They don't want the bank to come home. They don't want to go back to the bank branch. Now let's focus on the second issue, which is the RBI clamping down on unauthorized or unscrupulous loan apps, right? I think industry associations have written to the RBI working committee. As we speak, there's an RBI working committee. Now, what industry associations are saying is there are certain organized and authorized stakeholders, banks, NBFCs, authorized outsourced agents or digital loan app partners of these banks and NBFCs. So these people have to follow strict rules. There are rules on collection, there are fair practice rules on lending. You have to share the contract, the name of the bank, the interest rate, the tenor of the loan, everything has to be in black and white and has to be given to the consumer. So I think it's right that the RBI is recognizing and allowing organized and authorized stakeholders to continue and clamping down on unauthorized apps. So let's say a company is lending, they don't have a license, they're not the authorized agent of a bank. I think obviously that needs to be looked at and stopped. But I think the organized industry, right, and digital or instant loans is going to be the only way we're going to be able to deliver credit cards, deliver secured credit in this kind of COVID situation. And it's truly, I believe, the next step to grow the Indian economy and to give access to financial services to every Indian.
Well, Aadil, we leave it at that. Thank you so much for joining us then today on The Money Show.